I continue to believe Bitcoin is going to severely outperform the stock market. We saw Trump with his executive order get Bitcoin and gold into the savings account, into the 401ks of the everyday American, because bonds and stocks, the 60-40 portfolio is dead. It's over. It's no longer performant. Yes, the stock market is performant in dollar terms, but so is my iPhone, so is coffee, so are these headphones. Everything around you is performant in dollar terms because it's a really fancy, complicated way of saying the dollar continues to go down no matter what because we have to print it. What is performant in Bitcoin terms? Newsflash, almost nothing. Almost nothing. How do you know that? Is it just because Bitcoin scarcity? Yeah, you could leave it as simple as that. Is it just because Bitcoin's a globally accessible commodity and the US stock market closes and isn't available on weekends and isn't available to everyone in the world? Yeah, you can leave it as that. But you guys want a relevant, real-time approach to why I think the stock market is going to bleed over time against something like Bitcoin.
The enormous Bitcoin whale that unloaded 24,000 BTC, or about $3 billion in a single day, shook the cryptocurrency markets. The action precipitated nearly $900 million in liquidations and caused a $4,000 decline in the price of Bitcoin, with a large portion of the sell-off going to Ethereum. Strike CEO Jack Mallers joins the discussion and offers his thoughts on the future direction of Bitcoin. According to Mallers, Bitcoin is evolving into a permanent fixture in international banking rather than only an asset. He contends that it is inevitable that Bitcoin will reach $1 million per coin as organizations like BlackRock continue to advance with their iShares Bitcoin ETF. In addition to being a store of value, he believes that Bitcoin is attracting the attention of large organizations, sovereign wealth funds, and even governments that are starting to consider it as a viable long-term strategy. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
We're living through the greatest wealth transfer in the history of our species. And a lot of my mission, why I wake up every day and I go to work, is I'm trying to make sure that as many people as possible are a part of it. Bitcoin is the rare opportunity where we all can be a part of it. So let's take a look at this whole tariffs and margin strategy. Really, the point of this slide is to let you guys know that someone always pays. For every winner, there's a loser. There are no draws, there are no ties in the universe, okay? So we just got through almost all of Q2 earnings for the capital markets. What we found out is who's really taking a beating and eating all the costs of the tariffs. Our outlook includes $1 billion before tax in higher costs from tariffs in fiscal 26. The point of this is simple for me, guys. I continue to believe Bitcoin is going to severely outperform the stock market. We saw Trump with his executive order get Bitcoin and gold into the savings account, into the 401ks of the everyday American, because bonds and stocks, the 60-40 portfolio is dead. It's over. It's no longer performant. Yes, the stock market is performant in dollar terms, but so is my iPhone, so is coffee, so are these headphones. Everything around you is performant in dollar terms because it's a really fancy, complicated way of saying the dollar continues to go down no matter what because we have to print it. What is performant in Bitcoin terms? Newsflash, almost nothing. Almost nothing. And what underpins a lot of my thesis? When people say, how do you know that? Is it just because Bitcoin scarcity? Yeah, you could leave it as simple as that. Is it just because Bitcoin's a globally accessible commodity and the US stock market closes and isn't available on weekends and isn't available to everyone in the world? Yeah, you can leave it as that. But you guys want a relevant, real-time approach to why I think the stock market is going to bleed over time against something like Bitcoin? Because the margins of these businesses are getting murdered. They're either going to have to pass these costs on to the consumer, so all of our iPhones are going to get more expensive, all of our cars are going to get more expensive, or they're going to continue to take the hit themselves. And that's going to get crushed on their earnings, on their balance sheet, on their profit margins. As I've said, guys, when the US hyper-financializes, it makes its living identity being the world reserve currency. That requires businesses to hyper-financialize themselves. That makes, you don't just produce things locally in America because you're a good American. Guess what that'll get you? Your stock shorted, you fired. So now that we're imposing tariffs, the question is, who's paying? These businesses are paying. That means their stock is going to pay. If you think that businesses can take billions of dollars of hit on an annual basis and their stock isn't going to underperform, you're crazy. So this again is another reason that there's going to be a rotation out of stocks through this transition. There's going to be a rotation out of bonds through this transition. And capital will further find itself in the hardest thing you can own. Hard is in reference to how hard is it to produce more. Bitcoin is the hardest thing we all have access to. Not just everyone listening on this show, not just everyone in the country, not just everyone of America's allies. I mean everyone. I mean every single person with a pulse on this planet has access to Bitcoin, and it happens to be the hardest thing they can own.
The increasing use of Bitcoin by institutions, governments, and even the media indicates that its worth is at last being acknowledged on a broader basis. However, this is just the start of the adventure, according to Jack Mallers. He highlights the current focus on Bitcoin ETFs as a turning point in the financial system by drawing comparisons between the early days of Bitcoin and the current spike in interest. Mallers points out that Larry Fink's BlackRock has been leading the charge to get these ETFs approved by regulators. He contends that actions such as these demonstrate Bitcoin's enduring significance and reinforce its function as a hedge against the dangers of currency devaluation. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Okay, we got this from Trump. I mean, at this point, these come out every day. Jerome Too Late Powell must now lower the rate. I found this interesting because, you've seen Trump's language progressively go from, I think he should lower the rate. Look at everyone else's rate. It might be a good idea. This is how much it's costing him if he doesn't lower the rate. But now it's just pretty explicit. He must now lower the rate. I mean, that's how a parent talks to their child. You must now clean your room. So the explicit language here is pretty apparent. The damage he has done by always being too late is incalculable. Fortunately, the economy is so good that we've blown through Powell and the complacent board. I am, though, considering allowing a major lawsuit against Powell to proceed because of the horrible and grossly incompetent job he's done in managing the construction of the Fed building. $3 billion for a job that should have been $50 million. Okay. Guys, we're at the point where the Treasury Secretary of the U.S., the CFO of the U.S., has to go on TV and be explicit about what certain language he used to protect any form of independence the Fed has. Besson, don't you think it's interesting that you, as the CFO of the United States of America, are now demanding the independent central bank to cut rates by a very specific number? Does that scream how much pressure the fiscal situation is putting us in? Does that challenge any form of independence? I didn't tell them what to do. I just said, I think 150 basis points cut is neutral, should be where we are. Are we all adults here? What are we talking about? So I'm made to believe that that's not technically telling them what to do because you weren't explicit in how you use the English language? Bro, what do you think, I'm dumb? Come on, what are we talking about? That's where we're at now. And as I've said before, when push comes to shove, do you guys think the United States is going to, the empire will fall as we know it, and the U.S. as we know it will collapse, or do you think the Fed just will not be independent? I know the answer to that question. I think you guys do too. Here's really the reality of the situation. The Fed has to print the money now, or they trigger a revolution. And that's really what happened in Weimar Germany. That's just the same thing. Print the money or else. And what do I think is going to happen? I think the money is going to be printed. Next. Let's check in on this fiscal stress and the bond risk, because obviously all of this language comes from a point of stress, comes from a point of panic. You don't have the President of the United States obsessively tweeting over the Fed chair unless there's a really good reason. It's because our interest expense is skyrocketingly high. Our fiscal situation is a disaster. Our debt situation is a huge problem. They need, like I said, the rates have to come down. It's a cut the rates or die. It's a at all cost, the rates have to come down. Here's a tweet from Luke. I thought this was very telling. 30-year bond yields at the U.S. second biggest foreign creditor, which is the United Kingdom, are rising again, now at highest yield in over 20 years.
According to Jack Mallers, his goal is to assist as many individuals as possible in participating in the largest wealth transfer in human history. He thinks Bitcoin is a unique opportunity that everybody can take advantage of, no matter where they live or what their background is. He notes that rising costs, particularly those resulting from tariffs, are crushing today's firms, forcing them to either increase prices for customers or reduce their own earnings. Both results have long-term negative effects on equities. Mallers contends that the traditional 60-40 portfolio is broken, which is why conventional assets like stocks and bonds are no longer dependable. Indeed, stocks may appear to be rising in value relative to the dollar, but this is only because the dollar is depreciating. Almost nothing is doing well when compared to Bitcoin. Bitcoin, which he refers to as the hardest asset in the world, that is, the most difficult item to produce more of, will receive money that would otherwise go into underperforming assets like equities and bonds, according to him. Bitcoin is accessible to everyone on the earth, open, borderless, and permissionless, in contrast to corporations that may be influenced by global trade or political pressures. Mallers also emphasized recent political actions, pointing to Trump's executive orders that permit the inclusion of gold and Bitcoin in retirement funds, such as retirement savings plans. He drew attention to Trump's growing firmness in urging Jerome Powell to lower interest rates, stating that the wording has changed from gentle recommendations to hard demands that sound like a father giving a child instructions. Mallers see this as an indication of the increasing strain in financial policy and the need to take action quickly to prevent additional systemic weakness. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.